All right, guys, listen. You don't want to miss this, okay? We're going to be talking about calendar spreads, and you want the strategy. You know why you want it? It's the lowest cost option strategy there is. It's the most effective one. So pay attention, okay? Listen up. You ever done calendar spread before? Probably not. Even if you know about it, did you talk to your friends about it? No, you didn't. You didn't. Okay? You probably haven't put on a calendar spread before. I get maybe like 2 out of 100 of you have done this before. Okay, let me show you how it's done. It's super effective. I haven't done it on this account yet. I'm going to show you how to do it. This is the account. Don't worry about it. I haven't done an update. But look at this number right here, by the way, for those of you who follow the account. $50,000 brokerage cash right now. Super cashed up. But that's not why we're here. We're talking about calendar spreads. Here's how you do it. First of all, you go to a company you like. I do all my examples with Apple. You click on Apple. You're going to go to trade options at the bottom. It's the same thing on the app, Robinhood app. If you have a different broker, it's fine. You don't have to use Robinhood. It's fine. I just like it because it's cool. Okay? It's fun to use. Here's how you put on a calendar spread. What you want to do, see these 4 buttons? Those are the 4 choices whenever you're playing with any kind of options. Buy call, sell call, buy put, or sell put. For right now, you need either calls or puts. You don't need both. For calendar spreads, it's the exact same thing. There's no difference. You don't need both. See, here's how it works. Here's what calendar spreads are good for, by the way. If you think you have the skill to pinpoint an exact strike price, where you think a stock is going to be by the end of next week, let's say, this is how you want to do it. This is how you want to profit from it. Let's say Apple is at 155 right now. I think it's going to go down to 150. And I want to benefit from me being somewhat right in the vicinity of that 150 mark. I'm going to do a calendar spread. If I think that Apple is not going to move from 155 and I think it's going to be around 155, I'm going to do a calendar spread. If I think that Apple might gain $5 from the current price, I'm going to do a calendar spread. Okay? This is how it works. You sell. First you press the sell and then call button. You pick for the purpose of this video, and probably, you know, for all your future play, really, just pick the nearest date. Pick the next Friday, okay? The upcoming Friday. Now, go to the strike price here and pick a number where you think Apple's going to land. Okay? Let's say we don't think it's going to move much. Let's call it 155. Click on this button here. Add it to your little graph over here on the right. Let me see if you can see it. You can see it clearly. And then once you've done that, so sell, call, a specific date, add it. Then you go buy, call. You go to the dates and you go out 1 or 2 weeks. Let's just go out 1 week. Okay? And you're going to buy a call with the same exact strike price. Boom. Look what it says here. Robinhood's got 300 IQ. It knows exactly what I'm trying to do. Long call calendar spread. You see this? It's super smart. Tells me everything. It's going to cost me $107. You always multiply by 100 because every option contract deals in hundreds. So all I need to put this trade on is $107. That's it. Anyone can do that. Right? You can like mow a couple lawns and get $177 in order to put on a calendar spread. You know what? If you got more than $100, you can put on the same calendar spread multiple times, right? I'll show you in a second. Look at this. Robinhood added these charts here. You're going to learn how to read them today. It's your lucky day. You see what it says here? Max profit, okay, $164. So if Apple lands at exactly $155 by Friday, I'm going to get $164, which is more than double my initial investment. That's going to be my profit. Okay, so I'm going to get my money back. I'm going to get my initial investment back and $164 on top. Is this a likely scenario? Absolutely not. You're more likely to land somewhere in these other areas. See, at 150, I only get 7 cents profit, 150 and 75 cents strike price. I'm only going to get 7 cents. The closer I get to 155, the more money I'm going to get out of this. $36 profit, $41, $58, $68, etc. Okay? This shaded triangle represents all of my gains in the vertical axis, in the y-axis, and then the stock price in the x-axis, the horizontal axis. Axis just means one of those lines, okay? Like the number line. All right, you guys know the number line? Perfect. That's the x-axis. Vertical one is the y-axis. This is also a geometry lesson for those of you that skip school like me. So if the price goes over 155, you also win up to 159.50, which is where I'm going to break even. If this graph isn't clear enough for you, if you don't know how to read this graph, it even tells you down at the bottom. Here are my break-even points, 150.75 and 159.50. The price of Apple needs to land somewhere in between those two numbers for me to make money by Friday. If it doesn't, I lose money. How much money? It's not going to be that much. Okay? I can lose my initial investment of 107. In fact, I'm going to lose less than that unless the price, is way off. Way off. So I'm going to get some money back. All right, I'm not going to lose my entire initial investment. All right, so in addition to being the lowest cost option strategy out there, it's also the least risky one. That's why it's the lowest cost probably. You see what I'm saying? It's the least risky. Basically, let's take out like covered calls and whatnot. And it's the most efficient, right? Least capital intensive. You need the least amount of money to do it. Okay? Let's take a look at some variations. Oh, you have a question. What about the put? Why can't I use put? Okay, remember this chart. 155, right? Boom. $107. You profit, maximum profit. 164, etc. Let's clear this out. Okay? Let's start over. Trade options. Let's do it with puts. I'm going to sell a put at $155. I'm going to buy a put for next week at the same strike price of $155. What do we get here, ladies and gentlemen? It's the same trade. Actually, this one's a little more efficient. Maybe you need to buy, maybe you need to do it with puts. Because look, it's going to cost me only $97 initial capital, which I'm not going to lose all of it if I'm wrong. And the maximum payout is 187.38. You can do it with puts. Okay? But it's the same thing. It's the same chart. Look at these break-even numbers here. You see this? 149.98 to 160.35. So if you were going to go and do it, this would be the better option. Do it puts. Let's do another example. Okay? You can play around. You can search in the options market to try to get a really good deal. Okay? Because not all the options are going to be priced the same. All right? So for example, let's shop around a little more. Let's exit this and then do it again. So we got, how about we sell a put? We found out that puts are a little more cost efficient. We sell a put, but we sell it, let's say a little bit further down, like 150 area. You want to do this if you're a little bit bearish, right? Remember, you pick a strike price where you think Apple's going to be. So 150, and then we buy a put for 150, one more week out. Let's take a look at it. So I need $87 to put this on. All right. I'm going to have a maximum profit of 194. It's even higher. Okay. However, look at this. If Apple goes over 155, which is the current price, by Friday, I'm not getting any money. In fact, I'm going to start losing money the higher it goes, until I lose all my $87, which I'll never will, but I'm going to lose almost all of it, which is the same as losing all of it. Over here it tells you break-even price somewhere between 144.64 and 155.74. Okay, so you're going to profit basically the closer you get to your strike price that you pick. You see how this works? All right, now what if I'm a baller, right? What if I have more than $87 in my Robinhood account or my brokerage account? You click continue, and instead of this number being 1, you put down 50,000, right? 50,000 contracts. That's quite a lot. 50 contracts. Max cost only $4,350. That's all I need, okay? Which is half a car. And then if Apple gravitates to 150, I get a profit of $9,000. You see how efficient this is? All right, I get 200% gain if Apple finishes at 150 by the end of the week. That's huge money. Okay, this is big movement. What do you get from a calendar spread? You get fairly big movement, 100 to 200 to 300% gain, possibly if you nail the strike price exactly. You get cost efficiency. It doesn't take much to enter into a trade. If you want to scale it up, it's really easy to scale up. You just buy hundreds of contracts. And it's cost efficient, and it's very, very little capital intensity. All right, not capital intensive at all. So big profits, small losses, not capital intensive, low risk. Okay, have fun with calendar spreads. I'm not saying that you're gonna win with your next calendar spread. I'm gonna do a calendar spread probably next week just for kicks and giggles, just so you guys can see how I deal with it. I'm not saying that you're gonna win all the time. In fact, there's risk in anything you do in the markets, and when you're playing in options, the risk is probably that you're gonna lose. But this is actually one of the safest things you can do. If you're a beginner, or if you're intermediate, or if you're an advanced or an expert, you can do calendar spreads. Just do it. Just give it a try. Like I said, it's not guaranteed you're going to win, but what's guaranteed is that you're going to have fun doing it. Okay? Pro tip, you may want to exit the trade a little earlier. Don't let it expire all the way till Friday. If you're winning, the chances of you nailing that exact strike price is very slim. So if you're up like 20%, 50%, okay, maybe 100% if you've held on for a while, just exit the trade. Get your money back. I'm sorry, take the profits and just move on. Maybe put on another calendar spread for next week or something, you know, or keep the cash. Look for better opportunities. Don't be greedy. What's the saying on Wall Street? Bulls make money, bears make money, pigs get slaughtered. All right, have fun. Peace out.